Hey everyone, it's Josh, the Construction CFO, and today I wanted to go through how we cash flow forecast in 2026. We've been using this forecast for months, for 12 months or more, and we've had thousands of people run through it. We do it every month with our clients. So this is something that I think is super valuable. All of our clients love it. You would too. You would benefit from it, but you have to make sure you use it monthly so you can keep track of everything. If you like content like this, please like and subscribe because we want to do the thing with you. We want to teach you how to run the business without us having to be involved. Part of that is you can use templates like this or build your own. We're just showing you what's possible. And we're not here for theory. We're not here for thought leadership. We're here to actually do the thing that makes an impact and actually runs businesses. That we're going to start by calculating overhead. If you've watched older videos, we do the exact same thing. It's just updated version. We're going to go through our tab for minimum monthly operating expenses. If you have a cold season, then we're going to look at the 12-week forecast. We're not actually going to do the 24-month one in this. Nothing has changed for that one. So we're going to walk through this as if we're running a business. So office rent, lease, mortgage, however you do it. We're going to say $2,500 a month. Electric, that gets expensive. We're going to say it's probably $800 a month because hot in Arkansas, cold in the winter up in Minnesota. Water, it's just a standard, $200. Internet, well, Comcast has gone up, so we're going to say that's going to be $800. And this is really helpful because I joke about $800, but we literally have clients as we fill this out that say, I didn't realize I spent so much on that. I need to look at that. So just food for thought. Trash, that's just included in our taxes. Security, it's $100 a month. Lay down yard, that's included in our office rent. It's part of our package, warehouse, if we have one, storage units, whatever. Office supplies. We have somebody come in and just refill everything. It's $200 a month, but sometimes we get more, sometimes it's less, but 200 is the average. Office equipment, we also pay, $350 to rent all of our servers and everything, and somebody maintains part of it. We'll get to the maintenance later, but this is specifically the hardware. Telecom, we don't have the VoIP, the voice over whatever. We don't have those. We just have cell phones. So, but that's about $600 a month for our Verizon. Wow. Already up to $5,500 a month and we're going to aim to do like a $5 million contractor. And I have an example next to me just for reference. So that way I can go through exactly kind of where we should be if we are a $5 million contractor or what somebody else has already done. We're going to say Bluebeam's already up here. Maybe we have 4 licenses. We're doing the monthly subscription. It's about $100 a month. All right, we're going to look at Office 365. Another $100 a month for 9 employees in the office and field that need that. Plan Hub, we can't live without that. We have to get our media or our invites, whether that's Plan Hub, maybe it's Procore, whatever you guys use. But that's going to be $250 a month. IT. So IT, we're going to say that's about $1,000 a month. Our website, that's only like $100 a month. Legal fees, we don't have a person on retainer, so we just do one-off scenarios for that, and it's going to be for project specific. So we're going to look at that later because it's not an overhead if it's a direct job cost, if it's for something. But we don't have somebody on retainer. Payroll services, we pay $500 for ADP or whoever we use. Accounting services. We use Josh and his team, and we're going to say, because our software's already in there, we're going to say it's another $4,000. And that might seem a little expensive, but when you do things right and you do things well, then you charge a little bit more and you don't have the headache of dealing with people that don't. All right, we're going to look at the employee benefits. Say it's $950 a month divided by 4.33 to get to the weekly cost. That's $219 a week. It's not bad. Payroll taxes. This one's a a huge hit. This is one that people don't really understand or think about, but we put it under our overhead on this calculator just because it's going to be a guaranteed cost. Um, we could put a burden rate later on, but it just makes more sense to put it here. Now, when we job cost, it's a little different, but licensing and continuing education, it's only $100 a month because we don't really invest in education, but we do invest in our licensing, and we have 12 of them around the country. Training and development, don't do that. Fractional employees, don't do that. Advertising and marketing, I have to put something down so I don't feel guilty. So we're just gonna put $100 because I don't do that either. But all right, fuel. This is we're gonna look at owned equipment. This is gonna be your idle time and normal maintenance, not job specific costs. So for fuel, think of the weekly cost as like maybe you have a weekly stipend for your project managers. Let's say $150 a week. Oops, $150. Man, I'm fat fingering some stuff today. Maybe once a month we fill up our big diesel tank for all the superintendents to fill up and just go out to job sites, and that's $1,500. Maintenance. This is going to be a hard one, but if you have your P&L from last year, you can just look and see how much did I spend. Sometimes it's $15,000, sometimes it's $150,000, depending on the company. We're going to put this one down at about $3,500 a month. Registration. This all depends on where you live, but this is like if you have 12 vehicles and each one of them registers at different times, that's going to be different than if you have one-time hit. This is the monthly cost in this column, so I do want you to average it out. We're just going to say it's $150 a month because we have 10 and it's $1,500 to do them for the year, so I'm going to say it's averaged out. Fleet management and services. We do have like a tracker on the trucks. It's $250 a month for that software, so we can make sure that they're not speeding and stuff. This is a killer. People don't think about this. I literally have people that come in and they're like, I have no overhead. It's just me and my truck, and like I have the field guys. But when you think about your general liability insurance, this is $6,900 when you include that. Workers' comp's another $1,700. We don't have any insurance on the property. Not really a need for it. Vehicle insurance, that's a pain in the butt. $2,100. That easily could get up to about $11,000 a month. And you can pay monthly, or you might pay it quarterly. I prefer to do things month to month because it makes cash flow a little easier to maintain. But to each their own. All right, we're going to get into direct or non-direct job employees. So people that, if we're not job costing them, we need to put them under this. So maybe our estimator makes $75,000 a year. If you don't know what that equals as far as compensation, you can just say equals 75,000 divided by 12. That's your monthly cost. But we pay them weekly, and we need to make sure our cash flow shows weekly. So that's $1,400 a week. And that matters because we're not including benefits or anything. That's up here again in our payroll taxes. Benefits, we don't even offer that. I mean, it's just a couple key people get benefits, but everybody else is kind of like, good luck. Good luck, everybody. And that's pretty common for small businesses. It's hard to get insurance through anybody. When you're smaller than 15 people, nobody really cares to help you. Project management, we're gonna say this is job costed because we don't actually have somebody that is just in the office all the time. They actually go out and do stuff. Safety manager, warehouse employees, delivery drivers. I mean, this is for bigger companies, but you might have some of this. And these are all in-house. If you have anybody that's outsourced, put them back up above where we had like the accounting outside. Hey, now we have our payroll person. This is going to be, $1,700 a month or a week. Sorry. And then we get down and we're like, marketing. I don't have that. I don't have legal in-house, training and development. I don't have any of that, but I have me, business owner, me. We're going to say that I am paying myself a grand salary. I like to take all the distributions at the end of the year and say that's my salary. So I'm trying to lower what I do. So I'm going to say 45K divided by 52, 800, $850 a week. Oops. And what's sad is I see that. Man, look at all these expenses we're paying, and I'm paying myself $45,000 a year, which is half or less than half of what I pay my estimating team and everybody else. So this is just realistic. This is what I see every day. Don't be afraid if that happens to you. That's the goal, is to see it so you can change it. Then we have some stuff down here if you have business taxes in your state or union dues. But the way that the bottom looks, then we have the grand total. This is your weekly and your monthly. And so I take this one, takes it by 52. So it gives you your annual cost, and it gives you your annual cost taking that one by 12. So where this is really important is we can see our overhead is $891,000. So no matter what I do, I'm not doing any work. It's going to cost me $891,000 to maintain this business. If I want that to be a 10% overhead, because people, when they estimate, they do 10 and 5 or whatever they do, I need to be doing 8.9 million in revenue. And if you're not sure what revenue actually means as far as calculating here, it's not your estimating, it's not your sales, it's actually what you invoice, and it's not including retention. It's only what you are able to collect on during a certain time frame. And I go over plenty of that in other videos. Feel free to look those up. But what I see all the time is we have all this overhead. Last year we only did 6.9 million. I have a 13% overhead, and I could probably draw that out. A 12.99% overhead, or 9.2. When I'm bidding things at 10 and 5, the way that it sounds like it to be 15%, but the way that the numbers stack together, it's actually 13%. So if I had this much overhead, which I see all the time, and I'm bidding at 15%, or 10 and 5, sorry, not 15, I'm technically breaking even on this project. And that's if everything in my estimate goes right. That's why it's important to not estimate off of what everybody else is doing just to win the project, but to know your cost, put in your exact overhead. If I put in 12.92 and I still want to make 5%, sure, it's going to go up. But if I can't win a project at that rate, I need to cut something out of my overhead. I can't just sit here and keep going and hope that it's going to work itself out. At the same time, sometimes you invest in extra overhead knowing that you are going to grow and it's going to drop. So like if I did really 10 million, I'm at 8.92, 9% overhead. That's okay. That's where I want to be, is between 7 and I'd say 11.5%, depending on where you are. That means you have to job cost quite a bit and get there. But this number, it's hard. If you have never done more than 6.9 million and you have overhead and you're trying to grow, it's not as easy as like, well, I'm just going to win more work. Because if things delay, if you take a project and it pushes 6 months, your revenue is actually going to drop because of delays. So you have to be vigilant and look at that every single month. That's why the 4 numbers we look at includes net profit, so we can see our overhead. The next tab, the minimum monthly. This, I'm not going to fill it out this time, but what this is if you have winter employees, if you have a superintendent you want to keep over the winter and they're not productive on a job, but you have to maintain them, you have to pay them, otherwise they're just going to go find a different job and never come back. This is where you put those people in. So you would put Mark, 45 an hour. His burden rate's going to get added in, and that's going to have it in here, and it's going to flip on to our 12-week, it's actually a 13-week cash flow forecast. So we're going to move ahead to the next one. We're going to start at the top. The way that this works, I'm going to go over high level quick, and then we'll get down to we'll fill it out. We start with the latest Monday. So right now I'm filling this out on the 13th of March. The 9th was Monday. We're going to put 5,500 in here. That's what's in our bank account. That's why I'm downloading this, because it's stressful, because I see that. And you can see all of these numbers are already populated in here for my overhead from the last spreadsheet. It shows exactly when things are going to hit. And the way that this is set up is you want to have this really busy time frame to be about the first week of the new month, because April 1st is when my mortgage is going to hit, or my rent is due, or all my subscriptions are going to hit. You know, sometimes they alter a little bit, so you can adjust it as you want, but that's pretty typical. But you can see, like, I'm spending $10,000 to $39,000 a week. That's a lot. And I have to make sure I'm maintaining that. And part of that is collecting, not just billing. I have to actually know. So we're going to go through here. You have cash in. That's going to be my revenue. It's not your revenue from your billing or from your P&L. This is actually when I'm going to collect it. So when you have pay when paid clauses, you might bill in January, but you don't collect it until the first week of March. You might bill in March and not be able to collect it. Maybe it's April, maybe it's June, maybe it's August. It depends, right? But this helps you keep track of it and know, who do I need to focus on? And we have plenty of hidden cells over here. You can get up to 40 something projects, 30 something projects. You could add more if you need to as well. We have $32 million contractors using this, and they have hundreds of projects. So you can do it by division. You can do it by project. I prefer by project because it gives you a guideline exactly of what you need to do, who you need to focus on. So I'm going to update this a little bit. I want to show, we're going to look at 7 projects. Yes. We're going to go down. You have cash out. I'm going to come back up and fill it out, but I'm going to show you the overall flow of what we're doing. So we have, when is the money coming in? We have, when is money going out for overhead, guaranteed things. We have a spot in here for if you want to add anything. We have our project expenses, money out. And then we have the part that everybody likes to forget about, and that's your loans. When are we going to pay back credit cards? When are we going to do owner's draws or bonuses, or maybe we have an SBA loan that we have to pay off. Or maybe we have a family member who we have to pay off. We have to maintain doing something, and it's easy to think, well, I have 70 grand in the bank. I'm just going to write a check for it. And you never do. Or you write a check and then you get hosed a couple weeks later because you're not seeing when money's supposed to come in. And then we get to the bottom where we have one more section of money in. So if we have a negative, if we have a deficit, and we can't have our bank account go zero, or like the bank's not going to give us $4,000, right? It'll just, checks will bounce. People won't collect payroll and they're going to quit, and then you don't have any options. So really, I like to think of this as like our actual zero. So anything that's below this number in here is going to make all of these cells red. So really what would make me feel good is $180,000 in the bank, because that's 3 weeks worth of payroll. So if I don't collect a check, I'm still okay. So all these are still red. Obviously we haven't filled out anything. So let's go up to the top. I'm going to copy and paste some numbers in here just so you can kind of see what it might look like. So we have project 26006, that one has $205,000 coming in this week. And that's what I've been told. I hope it does, because otherwise next week I'm not going to have money to pay for everything. I had $5,500 in my account when I started. I'm going to collect 205. That totals it up in case you have more. Next week, I'm anticipating project 001 and project 9 are going to pay based on the payment terms and what they've told me. And if they don't, I can always move these and simulate what's that going to do to my bank account up here. Okay, I'm okay if it pushes 1 week. But there's times you're going to see where maybe our bank doesn't work as well as it should. And it looks like it's just going exponentially big. That's because we don't have any expenses in here yet. So hold on to your bridges. Let's go down here. We're going to look at the overhead. So if I like to do this at the end and like test scenarios, But just know that we're going to come back here and look at, maybe I want to hire a PM, maybe I want to hire a new foreman, or I want to do a job bonus, or whatever that might be. Something that's unrelated to project specific things. We're going to come back up to that again. Project expenses. I am again going to copy and paste some numbers here. So think of this as I'm going to go through, fill out all my labor. I know it's $58,000 a week. I need to ramp it down to $50,000 a week because it's going to kill my cash flow if I don't. And you'll see that in a minute when we put all the other things in there. I have $100,000 for material that I have to pay. I have to do something with. They've been barking at me. I don't have the money. Obviously, I don't have 100,000, and it was due 3 weeks ago. But I'm getting paid, so I'm going to make sure I pay it off as fast as I can. But also sustain where I'm at with all of my 50,000 a week. I have to keep paying my people, so I can't just write a $100,000 check without knowing that it's going to clear. I have a section for other material. You can put in specific vendors. That's what we do. You can change the name of the material and put in whatever. I'm not going to do that. This is just an example. If you have any subcontractors you have to pay, you can plan that out as well. And rental equipment. You can see, hey, I know that I'm averaging 5,000 a week or whatever it is for this piece, and I have to pay this guy because he gives me a deal, but I have to pay him weekly. So, you have that kind of an option. Or you have your typical like United or Sunbelt or whoever. You can do that monthly. But you'll know when they're due and you can plan it out. Now we're going to get to the fun part. So the way that we fill this part out, we have our credit card payment. We have a working balance. I'm going to say that this is due to the 9th of the month. The next one's due. Our loan repayments, the 17th, and then you have the sweep, that's, the 12th, and this is just the other one. Say that's trucks, that's going to be on the 5th and the 7th, because there's 2 different trucks, and I have one for the 28th. Oops, I'm going to put 28th. I can put in all my interest rates. It doesn't actually calculate anything using these interest rates, but it helps to put them all into one place. So which one do I want to pay off first? I don't know. Maybe this one's 30% a month. There is none for an owner's draw, obviously. Loan repayment. This is my SBA loan. This one's 7.5%. My sweep is only, that one goes up and down. It's 8.5%. And then I have other for a truck. We're going to say 6. 4.5 because I got a deal on one, and then we'll say 5.5. So as you can see, you can start to track them. It doesn't actually put in all of doesn't calculate anything, but it's good to know. For a credit card, this is your working balance. This is what's currently on there, and you're going to see there's an equation for the sweep. I wouldn't really worry about the credit card because we normally pay those off every 30 days. If you're doing payments on those, you can just copy this formula, paste it up here. But if you're paying it off every 2 weeks and it's $5,000 every 2 weeks because you use it for gas or fuel or whatever, go ahead and put that in there. But what we're going to do is put in what we owe on these. So I'm going to say my credit card, I don't have anything that's owed. We'll fill that out later. So we're going to do loan repayment. We're going to say this is $250K. I took out a $250,000 loan to start this place up. I don't owe anything on my sweep right now. I'm going to show you how that one works later. We're going to say for this truck, we owe $43,000. And this one we owe $80,000. This one we owe, $42,500. And you can update that month over month. Obviously, it's not going to redo it for you, but it's a good place to put it all in one place and update it. That's part of what we do with our clients when we go through this. Now we're going to pick, when are we paying things? So every other week, starting next week, I'm going to pay $5,000 on my credit card. And that's just fuel or whatever. That can be your average. That can be an exact amount one time. It can be whatever you want it to be. But I know that this is my top priority to pay off because 30% interest on a credit card is obvious. It's normal, but it's ridiculous. And it's the Dave Ramsey snowball effect. So we're going to stick with that. Look at this loan repayment. Excuse me. We're going to say that we pay back, $7,800 a month. And it's due on what, the 17th? So where does the 17th fall? It falls on week 2. So I'm going to delete it here. We move these every week so it aligns with when it's going to happen. The most important part about all of this is timing. So those are the 3. We have a sweep line of credit. I'll fill that one out in a second. That one's a little more unique. This one is the 5th. The 5th doesn't show up till this week. And we're going to say that's, for 1,650. We're going to say this one, it's the 7th. So this one's going to be the week after. That's going to be 2,500. And this one's the 28th. So it's back here. And that one's going to be 16. Nope, sorry, I don't want to do the exact same number. 1,800. So I like to just copy and paste. Typically they work out, but this one won't. And then both of these will go here. And this one will come here. Okay, so now I've gotten all of my loans in there. Again, we're going to do the sweep as a bit of a unique thing at the end. So as you can see, all of my numbers look fine at the top. I can look at the bottom. I'm going to have some heartache these first, 8 weeks. And what happens often is this is what your bank account looks like. You have $120,000 and then you have $8,000 a couple weeks later. And then you have $400,000 because you collect a big check and then you're back down to $168,000. And you hope that you're going to collect this one, but what if you don't? It goes like we can simulate what happens if I don't collect this $450. What if they push it off 2 weeks? What happens to my cash flow? I'm going to be negative in a couple weeks. So we're going to add a couple expenses in here and just say, crap, this one came up and it's I owe $50,000 to this subcontractor and they put in a lien notice. I have to pay it. See what that does to all my cash flow? It throws it off. So if I have a line of credit and it has this capacity, this is a sweep line of credit. It's one that I can pull against. Some of these other ones, if I have trucks, I can't go against that. I can't redraw against my my SBA loan. But a sweep or something like that, I can. So we're going to say my capacity for that is actually, I do 8 million. I'm going to say I get 750K. So the way that we do this, the sweep account, say that I want to have 15,000 in my bank account at all times. So I'm going to actually do a formula equals 41,348.77. I get that down here. That's going to zero it out. I'm going to add 15,000. That means that week I'm going to have $15,000. Then I'm going to get paid. And my line of credit or my sweep, it automatically will pay it back if I collect. So we're going to say I'm going to have plenty of money there. So I'm going to do equals this times 1.01 because it's only going to be out there for a week. I have a 7%. So I'm just going to put 1% in. It'll protect me. It'll cover me. So you can see I'm going to pay about $600 to borrow against that. That's fine. Then I get further down. This one is going to pull against my sweep account again. So it's going to be equals 15,253 minus this much, the 11. I don't want to do 11. 170.87 because it's going to always have a minimum. And so then I'm in the hole. Now on this one, I'm also going to have equals 59,511.7 plus another 15,000. So you can see now I'm going to be in the hole on this one, 78,340. I know I have my sweep account. This is how much is left on my sweep account. I didn't show you that earlier, but that goes up and down. Like if I change here, it's going to show how much is on my balance thing. So then we're going to get into, when am I going to pay this one back? Okay, I have to do equals the sum of these two times 1.01 again. That's 1%. So I'm going to really pay back 79,000. But now my cash flow for the next 13 weeks is going to work. And the way that we use this, like, yes, we made it all work. It happened. It takes a while to set it up. It takes about an hour and a half the first time you do it, and then just an hour to update it every time. But now I know for me to make my cash flow work, I have to go collect this. I have to follow up with this specific project on this specific invoice based on contract requirements of when I should get it, and also realistic of they told me I'm going to get it. Maybe this one's not due for a couple weeks, but they promised, they have a check, they actually wrote it, I've seen it, I'm going to put it there. It tells us like this week, still, I need to collect on these two next week, otherwise this whole thing breaks again. So I need to hit up these two project managers, accounting people, whoever on their other side, and then I'm going to also hit up the third week. I always like to go for the next 3 weeks because it takes people a couple weeks just to make sure or to go through the motions to get you enough paperwork. And what I always find almost every time we do this is if we wait till this week, they're going to come back with something like, oh, well, you didn't sign this lien waiver, so we can't release it until you send us that. And then it pushes to the next week because it's due on Friday and you don't have somebody in the office and you can't get it in time and all of that crap. Maybe in these ones, they come back next week and they say, you didn't actually finish this or whatever. It helps us to know this week why we can't pick that one up next week and we have time to fix it. If we wait till the week of, we don't really have much of an option. So it helps us know what we need to focus on to collect. The further out we get, the more of a guess it becomes, but that's okay because it's only meant to really help us get through the next 5 weeks. And we can almost guarantee these next, 7 or 8 weeks because we've billed the last 2 months. And normally we have net 45 payment terms. So we do all of that. It tells us exactly, we know our labor is going to go out. It tells us exactly which vendors, which invoices we're going to pay, which subcontractor, which rental company, when, what week. If we have the money, we're going to pay these ones. If we don't, for some reason, you get a copy of this. You can use it every week if you're in triage mode and you need to know how much am I going to have in my bank account every week and just update it and update it and update it. We do that occasionally. If we get into a bind, Christmas time, and you're a civil contractor, it's tough. You have to know what can I afford because you collect all that money January 1st from government projects. You have to know that it's going to last you till March or April when you're kicking back off and able to go collect again and bill. And you think, well, I'll just get ahead. I'll buy the new excavator. I'll pay off this one, whatever. Well, when you do that, then you hurt yourself later. If you don't have the line of credit that can sustain it and help you ramp back up, you're going to put yourself out of business. And that's why people say that growth is the biggest threat to businesses. But guys, I know this has been a long video. I appreciate you watching it. This is really in-depth. This is super important. It only took me about 30 minutes to go through this because I do it all the time. So it's easy. It will take you a while the first time, and that's okay. But give this a go. Again, this is going to be linked in the bottom below. And if you have any other videos you want to go over, hit me up. I'm happy to make them for you. I want to do content that you need and that you want. So thanks for watching. Patience.